It's Market Day Report. Welcome to a Thursday. It's been an interesting day of trade when we look at what's happened in the equities. Stock market has been selling off. We look at the VIX, the volatility exchange, and the VIX has been trading fairly high, very hot, but maybe not as hot as some might have thought it would. So what's that mean? Does that mean that, well, there is fear in the market, but not too much fear? What's happening with the row crops? What about the corn market? That's a good place to start. Front month is in positive territory, $4.60 a bushel, and we're talking about a market that's in nearly a 15-cent trading range. So plenty of action in there. It's too higher. Now, the December is a half penny lower at 4.48 and a quarter, but it's been in the red all day long. What about beans? Well, beans have been down 15 on the front month, 10.14 and a half. New crop down 18 at 10.19 and a quarter. And again, about a 15 and a half cent trading range there. Soy oil has been a really star performer for the market, up nearly 16.5% this year. Now, it is in the red today, but again, has been trading higher nearly every day. To the wheat market, July, Chicago, 5.51 and three quarters. That's down 1. Hard red is a penny and a half higher on the July, 5.81 and a quarter. And spring wheat, December, new crop penny and a half higher, 6.41 and three quarters. Joe Barker is with CHS. And Joe, as I look at the wheat market, still impressed by hard red, 3 consecutive closes higher. What's that tell us?
Well, I think the market is looking at the fundamentals. And I think, what we have today is a risk off, especially in the equity and the energy markets. But in our ags, we had good export sales for wheat. We had good export sales for corn. Beans were in the range, not great. But as we think about what our markets are doing, they're just pausing and digesting what's happening. And I just, prepared a few things before we came on the air this morning. And I wanted people to just think about the broader impact to our commodities that we focus so much on. We use 85% of our corn domestically. We only export around 15% of our corn. And so for corn to make that type of reaction it made overnight didn't make sense unless you just think about a classic risk off type trade. Now, I did that math also for soybeans. We use 57% domestically. We export about 43% of our soybeans. So that's a bigger concern for the soybean market. I think that's why you see the soybean market not rebounding like corn. And for wheat, we actually export 58%. We only use 42% domestically. So it's maybe drop back and look at the fundamentals and think before we make major decisions. Also did the same math for meat overall. If you look at the USDA on total red meat, 87% is consumed domestically. That's 83% for beef and 94% for pork. So as we think about the impact on our markets, I think we need to stop, pause, take a look, and digest before we make a decision out of panic. And I guess that's been kind of what we've been talking to customers about today is, let's think about these fundamentals. What really changed for the corn market? I don't think that much really changed for the corn market. What really changed for beans? Well, that could have a bigger impact. And so that's what we've been talking to customers about today.
Wow, a great insight on that, and just framing the conversation from a little different perspective. Reminds me of those pictures we had back, what was it, the 90s, where you'd stand one place and you'd see one picture, but if you moved over, you'd see a completely different one. And sometimes I just had to look at them cross-eyed and couldn't see anything at all. But I appreciate your insight there and your different perspective. Joe Barker is with CHS and joins us this morning. All right, let's take a break. We'll come back and we'll talk about those meats, red meat, white meat, and energy markets. Market Day Report continues in a moment.